It's a pleasure to be here at this workshop on strengthening women's agency to power impact. Uh, this is an area which definitely there has been too little work. Okay, though some may say there's been a lot. We do know that the impact of financial deepening, which is the availability of credit as economic growth takes place, has had positive impacts on growth, but it has also had, in many countries around the world, a negative impact on economic inequality. And part of the reason for that is because as financial systems have deepened, there has been a lack of financial inclusion. Okay? So it is good to unravel what is the impact of financial inclusion on economic equality and growth. And for that, it's most important that we look at not just macro level data, but at what is happening at micro level in households and at village level institutions. Okay? And for that reason, this particular workshop is very interesting. Okay? I think in an educational institution, it would also be good to mention the other variable that impacts on economic inequality, and that is obviously education. Okay, so lack of access to education has also had huge impacts, especially because in the recent decade or so across the world and even in India, we have witnessed what is called as skill-biased technological change, which basically has resulted in those who are educated obtaining some sort of a skill premium and also having huge upside gains in incomes the higher the level of education that people happen to have. Okay? So it would be interesting to see this trade-off between levels of education, financial inclusion, growth and inequality. And I think that is an agenda which is very important for India today to grapple with, given the way in which economic development is progressing. The government has of course been seized of this matter in more ways than one. Just as recently as around Diwali, for instance, the government had pushed for more financial inclusion. There was a move by the government to include those who are in the voters list and therefore above the age of 21 into the PM's Jan Dhan Yojana. And so banks had been advised to check those who are on the voters list and who don't have an account and include them. More than that, it was also the case that those who are 40 years of age were to be included in the two insurance schemes that are part of the government, which is the Jeevan Jyoti Bima Yojana of the PM as well as the Suraksha Bima Yojana. Okay? But what interests me is the third aspect of the intervention by government, which is that they requested banks to have co-lending facilities with NBFCs and MFIs, okay, in which they would onboard about 80% say of the loan that an MFI has given and use that to actually try and reduce interest rates and increase the flow of credit in the economy. Okay. Now that's another way of improving financial inclusion. But one of the things that one must consider on balance is what is the trade-off between financial inclusion and financial stability. Okay. So if financial inclusion does reduce inequality, it may also lead to instability. I mean, more often than not, we do argue the other way around, that it increases risk, the ability to manage risk and therefore improves stability. But often we know that finance is given to people who are not credit worthy or who are not in a position to manage the credit that they get. Okay? And we've seen instances of that in the Andhra Pradesh microfinance crisis. We've seen instances in the subprime mortgage crisis in the US. Across the world, we've seen many instances of that. So it's worth thinking about, what is it that we can do to actually reduce financial instability as we try to improve financial inclusion. Okay? And in that, certain things are well known that we would want to consider, and one of those definitely is, again, the education variable. How much does financial literacy actually improve financial inclusion rather than just access to finance? Okay? And that requires us to do much more micro level studies than we have been doing. Okay? It's also the case that the more we delve into this, the more we are seeing microfinance institutions in a sense overlending, because in many areas in India there are many microfinance institutions in a region, and there has been, as a result, a sort of a rotation of loans that has been taking place. Okay? That could have again an impact on financial stability. So people may be financially included, but maybe they are over borrowing, and as a result of that, they may be putting themselves into indebtedness. Okay? So there are many interesting questions that we need to think about, and this workshop is a great way to kickstart this issue. It's really about thinking at the micro level, what is the impact of a very important policy variable. Okay? We know much more, I believe, about, say, the impact of basic health, such as, say, immunization, on what has happened to the population. We know much less about how financial inclusion has actually impacted households. And so you can't have a more opportune moment for a workshop like this. Okay? So I look forward to the collaboration that is there between IMA, CIIE, IRMA, and of course the funding agency, BMGF, and to the papers that are being presented. And I hope we have many more such workshops which improve our understanding of a very important phenomena in the Indian context. Thank you.